Okay, so today we are going to talk about finance and the real economy. And many people talk about when they think of economics, especially those who are non-economists, generally people they think of economics, they think of finance, they think of stock market, money, and all those things. But interestingly, historically, economists uh, actually did not consider finance rather serious. They focused more on, like, for example, trade, specialization, division of labor, the role of markets, the role of government, as we have studied in different sessions. So in a sense, it is counterintuitive, because whenever you say to someone that I'm into economics, they'll talk about stock market and, money and all those things. But many economists, a rather major chunk of economists, are not into these things. They are into economic growth. They are into institution. They are into education. They're into a different kind of law, another thing. But finance is somehow historically been neglected. But now in the last 30, 40 years, finance has established itself into a kind of major subsection, you can say, subject of economics. So in that context, but one thing that I want to sure at the start, that the presentation that I've prepared, or the lecture that I've prepared for this session, is primarily about finance in the context of business, finance in the context of financial markets and financial institution. So we are not going to talk about a part of finance, what we call public finance, which is separate topic, and we don't have frankly speaking, time to go into those things. So that we are not going to talk about government finance and taxes and other kind of, that element. So we'll focus on firms and firms, why they need finance, what is the importance of financial system, why we need financial institution, their importance, and eventually what happened when something goes wrong. Like we'll talk about financial crisis as well. So let's start. Let me share it with you, this slides, so then we can. So this is just a minute. Let me. Okay, so hopefully now you can see it. It is about finance and the real economy. Okay, as I said earlier, that economists disagree sharply about the role of financial sector in economic growth. Just to give you an example, that finance is not even discussed in the collection of essays by pioneer of development economics, as we discussed development economics earlier, including 3 Nobel Prize winners and Nobel laureate Robert Lucas. They also, in a sense, dismiss finance as an overstressed determinant of economic growth. And they make the case that it is the other factors. And as you can see, as John Robinson said, that where enterprise lead, finance follow. So what is the argument? The argument is that if finance is just a kind of follower in the context of economic growth. So if firms are growing, and if economic growth is happening through production of goods and services, finance would just follow that. And here again, the finance mean financial system, financial sector would follow from that. So it is not going to cause the economic growth, rather it is going to follow that. So finance does not cause growth. Finance respond to the changing demand from the real sector. So economists divide the economy into 2 broad sector, like what they call real sector. Real sector means agriculture, manufacturing, and services. And financial sector is where banks and financial institutions. So historically, if you look at even economic ideas, finance were not that much represented. Although in the popular imagination, as I said earlier, it is always people think of, when they think of economics, they think of money and finance, but that was not the case, at least in the economic literature or tradition. And okay, but there are, of course, people who make the case. For example, there is a famous economic historian, John Hicks. he make the case that even if you go back and see the Industrial Revolution, which we touched earlier, because that is one of the most transformative economic event in human history, which resulted in tremendous growth of more goods and services, which made England or United Kingdom an economic powerhouse. And people have been arguing and making cases for what causes the Industrial Revolution. So there is even a subspecialty in economic history. There could be, you can identify hundreds of maybe PhD doctoral research on this particular topic, that why Industrial Revolution happened in England. Why not in other areas? So that is one of the question, and there are many explanations concerning to our discussion right now. John Hicks make the case that it is actually basically financial innovation that led to this Industrial Revolution. So what kind of financial innovation? It is one of the things that most of you are well familiar with, and that is actually a kind of legal innovation and a financial innovation, what we call limited liability. And initially, when this idea was presented, that before that, because before Industrial Revolution, businesses were there, but their scale and size was limited because of many factors. For example, as we discussed, Adam Smith made the case of division of labor, and division of labor itself depends on the market size, because the market size was small before Industrial Revolution and the transportation was difficult. So even those businesses who were there, they were mostly localized with a few exceptions, but most of the businesses were small. And those businesses were organized either in the form of what we call sole proprietorship or partnership. So these are traditionally, and even still, highest number of businesses are still sole proprietor or partnership. But then this idea of limited liability comes up, which is a kind of legal innovation that people can put up money into a business and somebody can run that business, but their liability, in a sense of anything goes wrong in the business, is limited to their investment. So this is the core idea of limited liability. For example, just to give you other example, in case of partnership, so if the partnership business itself borrow from the bank hypothetically, and if they are unable to pay back, so these partners are personally liable for the liability. So this is a big hindrance. Many people would not want to join those kind of business. They don't want to put money there or resources. Why? Because their liabilities are unlimited. So this idea of limited liability, which actually was highly consequential, that people can join hand. So in a sense, this is a kind of financial innovation as well, that even in order to make your businesses grow beyond a certain scale, you cannot rely on your, what we call in accounting, retained earning. So businesses cannot rely on those because you need a lot of money. And that is, I think, one of the reasons, although there could be, you can list down dozens of reasons, that why businesses in countries like Pakistan don't grow beyond a certain scale. There could be many reasons. There could be regulatory reason, there could be managerial reason. But one of the reasons which has been identified in different research as well is this, what we call credit constraint. As you can see, credit constraint. What is credit constraint? That firm want to grow, they have an opportunity, but they don't have money, they don't have capital. So you can even make the case that they can rely on retained earning. But the point is, you cannot rely on retained earning, because in order to grow, you need a lot of money. Let me give you a very simple example. If you're running a successful restaurant in countries like Pakistan, as we know, if the restaurant is successful, that means it's a kind of money-making machine. There are very high profit margins, provided that the restaurant is successful. Although it's highly competitive, but let's imagine that if a restaurant is successful, maybe they would have 30 to 40% profit margin. But the point is, in order to grow means in order to open up branches, maybe like a couple of branches ultimately a couple of branches in a month. Eventually you have to grow at a very high rate, as you can see in many global corporations. But that is not happening. Why? Even a very successful restaurant cannot just rely on retained earning. On the other hand, the banks and financial institutions are unable to give them money. So that is one of the reasons this credit constraint is one of the biggest binding constraint on firm growth. That's why businesses don't grow beyond a certain limit. Although I'm not saying that this is the only reason, there could be many other reasons, but this is one of the reasons. And where it does work, but the credit constraint is not an issue. You can see this, the role of venture capital in Silicon Valley. So all of these technology companies, not all, most of these technology companies are based in US. What is the reason? Again, many reasons, but one of the reason, important reason relevant to discussion is the role of venture capital. And what is venture capital? Which is another financial innovation, you can call it, or financial development mechanism. There, people join hand and they put money into high risk business startups. And again, as in Pakistan now, many startups are now thankfully getting traction and they're getting funding from international funds and also the local funds. But one of the reasons all these Google, Apple, and all these come to ideas and product without the backing of initial venture capital, because initially, because of high risk, traditional financial institution like banks would never give them money. Even sometimes they're not allowed to do because of some regulatory reason. So the idea is that it is, you can see that how finance has played an important role in this context by channelizing funds to those. So Silicon Valley and all of these technology companies, whether it's Facebook or Google or Microsoft, they were all backed by these venture capital, which is a kind of mechanism. So even successful, as I said earlier, local businesses are unable to scale. Scale means size. So they are unable to increase their size. So even a very successful restaurant would open up maybe one branch in a year or so. But just imagine if you have the same restaurant in like US or other countries, and if it is very successful, again, this is a big precondition, that if it is highly successful, then the money would not be an issue. So you don't have to rely on retained earning or owner's equity only. So there are mechanisms like venture capital and also financial institutions. They are a bit more than willing to fund that. Another data point that I want to share with you, this is based on a relatively recent research in 2017 by a report by State Bank, that there are around 70% of total bank lending. So that means if 100 rupees are lent by all the banks in Pakistan, if total 100 rupees are lent, 70 rupees out of that goes to the corporate sector. So these are big firms, mostly public limited or even private limited. But what happened? That the remaining sectors of the economy like SME, agriculture, housing, they get only 30 rupees out of that 100. So now you can well imagine that, and this is, we can see anyone who is doing business or someone he knows, he or she knows who is doing business. This is one of the big, challenge that they're facing, especially small and medium-sized businesses and agriculture. They don't get the required, they don't have the required funds, so they cannot exploit the even opportunities given to them in different context. So this is just to put into the context that although it is ignored, but nevertheless, as we can see, and it is quite obvious that the finance is important for firm growth, and from firm we can lead to macroeconomic growth, which is economists are normally more interested in GDP growth and other things, but ultimately the GDP growth comes from micro actions of the individual and firms. So, okay, now let's go back to that, as I said earlier, historically finance has been ignored, but starting in 1960s, theoretical work in economics have started, which actually identified the important role of financial intermediation. So financial intermediation means like banks and other things. So we can interchangeably use these terms, financial system or financial intermediations broadly. Now, so this is because as we're in this course, we are interested in major ideas. So that's why I'm going to share you one of the big ideas theoretically in economics, which has huge implication for financial sector. And that is presented by George Akerlof in somewhere in 1960s, mid 1960s. And later on, Joseph Stiglitz has also worked on that. And both of them, along with Michael Spence, they won the Nobel Prize in 2001. for economics. So that, and one of the contribution again, among many, was this very famous paper written by George Akerlof called The Lemon Problem. So it's it is very famous paper. It's a short 12-page paper, and it is interestingly, when he was on sabbatical at that time, he was, I think, in UC Berkeley, but at that time he was on sabbatical, and he was in India at Indian Statistical Institute, which is a premier institute in India, and he wrote this paper, and this paper was thought to be so obvious, and it was actually rejected by leading journal like American Economic Review and other. So I'll share you the basic idea. It's very intuitive, easy to understand, and maybe that's why the paper was rejected. But later on, it was published in Quarterly Journal, one of the another leading journal, and it turns out a very important insight. Now, what was the insight, and what do we mean by lemon problem? In order to discuss that, we have to understand that in economics, we believe that there is a thing called demand and supply, which we touched earlier. And economists, especially free market economists, Adamson, believe that if we allow the demand and supply forces to work, it would give us price. And price are the right signal, which actually, based on demand and supply, prices are the best way to allocate the resources. Not the central planning, like in the last session, we talked about Hayek and Milton Friedman, and this was one of their idea that if we allow the markets to work instead of central planning, then the resource allocation would be like efficient. So this was what we call classical economics. But economists somehow ignored this role of information between buyer and seller. So this is simply ignored. For example, if you're selling something, they just assume that both the parties have the required information, and they just assume it. And under that assumption, they assume that once they have information, they have the same level of information, so price would be optimal. So what is the key insight, and a very interesting insight by Akerlof was he challenged this notion, and he make the case that what happened when the information is not same between the parties. And economists use, of course, some jargons to explain this simple phenomena, and they use a term called asymmetric information. Now, asymmetric is opposite of symmetrical. And symmetrical means like if somebody is into statistic, one of the distribution that everybody is familiar with is what we call normal distribution in statistic, in which the distribution of data around the mean is equal on both sides. That is called symmetrical. So this is not that, this is asymmetric. So what do you mean by asymmetric information? In simple word, when both parties don't have same level of information. So it is quite obvious, it is quite logical, the people who buy and sell, it is quite obvious that both the parties don't have same level of information. But the whole economic premises or economic models and theory was built under the assumption before Akerlof, before he presented this paper, that both the parties have same information or they have the required information. So he challenged that, and he made this case that when there is asymmetric information, when both the parties don't have same level of information, it creates problem. And he come up with this a very simple example that I'm going to share it with you for second-hand car market. Just bear with me. This is a a conceptual theoretical idea, but it is highly consequential, as you can see in a minute. The idea was, and he used this called lemon problem. In what is lemon in second-hand car market? Lemon is used for something called like bad car, the car which is not good. In a sense, it might have an accident or some kind of issues, technical issues. So that is called lemon. And what is peach? Peach means a good car, like which is good. And again, keep this thing in mind. We're not talking about brand new cars. We're talking about second-hand car. Again, car is just an example. Later on, you can apply it on anything. It could be mobile, it could be laptop, it could be, later on we'll talk about, it could be shares, bonds. But for simplicity, let's talk about a second-hand car. Why second-hand? Although even when you go for brand new car, for example, when you go and buy a brand new Honda Civic, so Honda knows more about car than the buyer. But we ignore that because all the new Honda Civics are at the same price. So it's not a good example. Let's talk about you want to go and buy a second-hand car, let's say Honda Civic, which is second-hand. But now the problem is buyers know more about the car than the seller. And again, in economic theory, when we create model, we use certain assumption. In practical life, you can have different ways to overcome this. For example, you can hire someone. Maybe your friend knows more about car. You can ask him to give you advice. So what we are assuming, you don't have any friend like that. You cannot hire, let's say, mechanic or an expert. For timing, we are assuming. These are called assumption in economics. We have to make certain assumption in order to understand the phenomena. So we are assuming that there is no middleman, there is no expert. Just imagine, and there is none of your friend knows about the car. So just imagine. In real life, these are the things, but just imagine there is no one. Now, in that case, how the market would work. Now, if you want to buy the car and there is a seller, and seller knows more about the car than the buyers. Now, what would happen to the price? Just follow this example. Hypothetically, if that car is lemon, again, if it's not a good car, based on model and based on certain feature, you can guess the average price if the car is not good. Let's say that average price is 1.8 million, hypothetically. So that is the car. If the car is not of high quality, it's a lemon. But if the same model car is peach, then the price is, let's say, 2 million. Just again, this is hypothetical, but these are average prices. Now, the problem is you are the buyer and I'm the seller, just for the sake of argument. You don't know whether the car is lemon or the peach, and you don't have any way to know it. So you don't have an expert. You are not yourself an expert, but I know. So just to make it a bit interactive, because I know it's a theoretical concept, sometimes it is a bit confusing. So just to make it an interactive, and you don't know whether it's a lemon or peach, and I know it. So, and both of know this thing that if it is lemon, the price should be on average 1.8. And if it's a peach, the price should be 2 million. Again, this is, everybody knows, based on market average. So what do you think? What would be your response if we want to sell your car and you are the buyer? What is the price that you are going to offer? Anyone? Again, this is just to make it a bit more clear, although it's not a traditional class, it's a more like, but nevertheless, if somebody just want to comment on that, what would be your response? Again, it's an hypothetical. You might be an expert in car, but just assume you don't know anything about much about car. So what would be, anyone? You can raise your hand or just random. What would be the number that you are going to quote for this car? Anyone? So, okay, let me repeat the question. The question is that you want to buy the car and I want to sell the car. Both of us know that if the car is lemon, we don't know where I know that this particular car is lemon or peach because I am the seller, I know it, but you don't know it, whether it's a lemon or peach. But one thing is sure from, you can say from Park Wheel or anything like that, you know that if based on the model of the car and the company name and other things, if it is a good quality car based on a particular model, then the price should be on average 2 million. But if it's a lemon car, then the price should be, let's say 1.6, just to make a difference. So then it is 1.6 million, because you don't know whether it's a lemon or peach. What would be your, what price would you like to buy that? Because you don't know. Because if you know it, then it's very simple. You can offer me 1.6 in case of lemon, and you can offer me 2 million in case of peach. But because you don't know, so what would be your response? Anyone?
Sir, I think this is a game theory problem. It's in a way a prisoner's dilemma. So I guess the best choice would be to find a middle ground, because then you can also cap your losses. Agar wo lemon hai, agar peach hai, then you got it for a discount if you are able to buy it on a average.
Good. So, okay, that's interesting. That because you don't know. So let's say in between 1.6 and 2, you have 1.8. So somebody could offer me that, okay, I'll willing to pay you 1.8. Okay, that is good. One option. Anyone else? Any other?
Meher wanted to ask, yeah.
Yeah, I also would say 1.5. I'll start with 1.5.
Okay, 1.5. Okay. Anyone else? So because you don't know, that is the whole problem, what we call lemon problem. Okay, so the point is, what would happen? Just again theoretically, practically there are many ways to solve it. So we'll go to that in a minute. But theoretically, what would happen that, as this has been mentioned, this is quite a tendency for people to go for average because they don't know what would be the price, so they can offer 1.8. Now, what would be my response? Anyone? If the what would it, because I know it's a lemon or peach. So if somebody offers me 1.8, what would be my response? A seller's response would be in that case. Marshall, you raised your hand. So yes,
I think as a seller, you would automatically go for the higher price. You would try and make it seem like you're not selling a lemon, you're selling something, a peach, basically.
Okay, so whether I would accept that offer or not at 1.8.
Since as a seller, you would know whether or not you're selling a lemon or a peach. So if it's a lemon, then you would accept 1.8, I think.
Okay. So yes, this is how theory works. In theoretically, yes, if somebody offers me 1.8, because I know it's a lemon or peach. So if it's a lemon, I would sell it. The problem is, then he raised this point, because you're also participant. Then you might think, if I'm willing to sell the car, then the car is definitely lemon. That's why I'm selling it. Because if it's a peach car, again, we are assuming that I'm not in a hurry to sell it. I'm not in emergency. Otherwise, in emergency, you can sell even peach car at 1.8. But again, we are assuming there is no hurry, there is no emergency, or there's no fire sale that I'm going to do. So the point is, if I'm willing to accept the price of 1.8, the buyers would get the signal that then the car is lemon. So that's why he's selling that. So theoretically, what would happen that here, this is a classic case of market failure. In a sense, market would fail. Even if the price is 1.8 and in emergency, I have to sell it because it's a peach car, but because you don't know and you're just only offering in 1.8, again, it's a bad outcome. If I'm selling a peach car at 1.8, it's a bad idea. If I'm selling a lemon car at 1.8, it's again a bad, inefficient allocation of resources. So in a sense, with a very simple example, Akerlof actually challenged the basic notion of price determination and demand and supply. If you ignore if you just consider this information problem, then this whole economic paradigm is on a very shaky ground. Because if I'm selling a lemon car at 1.8, maybe I make money, but we're not talking about particular individual. We're talking about general market. So it's a misallocation of resources. I can sell the lemon at 1.8. Or if I'm selling the peach at 1.8, even that's not a good idea. Because an efficient market would be that market in which lemon would be sold around 1.8, not exactly 1.6, but around 1.6, and peach should be sold at around 2 million. Again, so with a very simple example, and that's why maybe the paper was rejected. They thought it's a very obvious thing. But it turns out that it is very important, because if that is the issue, then the market would not function. There would be dysfunctional market, or if the market would function, that would be a market which is inefficient, which is again the core idea of economics, is that the prices would allocate the resources inefficiently. Here, the prices are unable to allocate resources efficiently because of asymmetric information, and this is the major issue. And now, what is the solution? In case of car, the solution is you can hire an expert who can identify. And again, there is no free lunch. You can pay someone like, I think Park will have started the service. You can pay 4,000 or 5,000 rupees. They can check the car and they can identify whether it's a lemon or peach. And then you can, of course, there are people who are willing to buy lemon. Lemon is not something like nobody is willing to buy. But the point is, lemon should be sold at a discount and peach should be sold at a premium. So that Parkwheel is one solution. Even middlemen, the car, people who are selling the car, middlemen, they're also a kind of intermediation, because they are able to identify the differentiate between lemon and peach. And in a sense, because it's in their business interest for the long run, they are more likely to sell the lemon at the lower price and peach at the higher price. So this is, and later on, as I said, this is not about cars. This can be applied on stocks. For example, Joseph Stiglitz, who won the prize along with Akerlof later on, he applied the same idea on stocks. Let's say you buy the stock of a firm, shares of a firm, or bonds. Again, instead of second-hand car, now you have bonds. So companies know more about whether the company is peach or lemon, or whether the bond is like the stock is peach or lemon, or the bond is peach or lemon. Again, if you use the same example, as a buyer, I might go for an average price because I don't know whether the company is peach or lemon. Again, I'm just using the same terminologies, although they are not used there for companies, just to make it easy. So whether the company is peach or lemon, or so you don't know. So in that case, even companies are unable to raise money. The good companies are unable to raise money because the market is unable to price them appropriately. So that's why after this paper, there is a whole argument for financial regulation and these accounting statements and publication of these statements. All these things are to reduce this lemon problem. You can never eliminate this because always the buyers have more information than the seller. That's not, it's not no point of, getting rid of this problem. The point is how to reduce them. So that's why now let's take it and apply it on the financial sector. Why we need financial intermediation? Why don't just people borrow and lend directly, which make more sense in a sense from a cost point of view? But the point is, again, the problem is asymmetric information. If somebody comes up to you and they want to borrow for the business, again, the problem is you don't know whether it's a lemon or peach, and you don't have, you have asymmetric information, so you cannot select, and this is the problem. And that's why financial intermediations, for example, banks, they are in a much better situation. Why? Because they have two things. What economists call, they have lower transaction cost. What is transaction cost? When you give loan to individual on a individual basis, you have to hire a lawyer, you have to hire an expert to identify you, and that creates what we call transaction cost. In addition to that loan, you have to pay an additional cost for that, which for banks is very lower. And secondly, economies of scale. I and you might give one or two or three loans, and it is very costly for us to do the due diligence to understand whether it's a lemon or peach. On the other hand, banks have what we call economies of scale. Economies of scale is another important concept in economics. Scale means size. So when you increase the size, the per unit cost would reduce. It is applicable whether you're making furniture, you increase higher number of chairs, your per unit cost would go to it. It is equally applicable on banks because banks are doing on a massive scale, so they can give loan. They're not giving one, two, or three loans, they're giving 100 loans. So their due diligence cost, their analysis cost, their ability to identify lemon or peach is very high. So because of that, there exists this transaction cost and economies of scale. So this is a kind of on a side note, this George Akerlof is still alive. His wife is currently the Treasury Secretary, Janet Yellen. She's also an economist. So she's a Treasury Secretary under Biden. And previously, she was the first female who had the Federal Reserve during, I think, Obama tenure. So this is a power couple. Both of them are economists, and he's the Nobel Prize winner as well. Now, coming back to now we make theoretical case that why financial system is important and why we need that. I'm going to quickly go through some of the important functions which are quite obvious. For example, without a financial system, it is very difficult to evaluate possible investment and allocate capital because banks and other financial institutions like venture capital, they economize on information acquisition cost because individually it is very difficult for me to identify it. And secondly, there is another side problem that which economists identify called free rider problem. The point is, let's say if I hire someone and I investigate which company is lemon or peach, and I identify after spending, let's say 50,000 rupees, identify this is a good investment opportunity. Now you have not invested that money. You have not spent that money on consultant or an expert. You can just simply follow me. If I put money into that stock, you can follow me. So this is what they call classic free rider problem. Now, if that is the case, then in future, I'm not going to invest money into that information acquisition because my return would be lower because I have to pay this cost in comparison to your return because it would be higher because you have not spent this 50,000 rupees on acquiring this cost and identify whether it's a lemon or peach. reach. So on the other, the thing is that financial institutions, they can economize on this information acquisition cost and then improve the ex-ante assessment. Ex-ante means advanced assessment of investment opportunities with positive ramification or resource allocation. So they're in a way to identify that how to, which are the good project, and then they can allocate those resources for those projects, which is not good for firm. As I said earlier, it is also good for industry. It is also good for macroeconomy, ultimately GDP. And secondly, financial institution also make it easy what we call corporate governance. This is another big issue what in economic theory, what we call agency problem. What is agency problem? Let's say you put money into business and somebody else is running that business. So that is called, you are the principal and that person who is running the business is agent. Now, how to make sure that agent work in the best interest of principal, which is like you are the principal who are putting money. So this phenomena is what we call, this issue is called agency problem. Now, through corporate governance mechanism, of course, you can have this whole board of director, which are selected by what we call shareholder, the people who put money. So through this corporate governance mechanism, you can make sure that the agents, which in this example are managers, work in the best interest of principal. So financial system provides through shareholders and credit this kind of mechanism. And because of this mechanism, many people are willing to invest in businesses, in their stocks and bonds without running them. Just imagine if this is not possible, then people would not buy stocks of companies, and all these big companies, public limited companies, could not get that required money and finance from people. So through this mechanism, this is another function of the second function of financial system, through corporate governance and accounting standard and financial publication of financial statement and audit and all the regulatory framework that we have, like SECP in Pakistan and other, all of that is to facilitate that the people would invest in these companies, otherwise they would not. Then management of risk, like one of the core principles of risk management is don't put all your egg in one basket. Now, if you're running business yourself, then it's highly risky in a sense, because your risk is tied up into that business. So through financial system and financial instrument like stocks and bonds, you can diversify risk. So you can put money into different companies. This is what we call portfolio. And through that, you can, what we call cross-sectional risk diversification, which means you can put money in cement company, but you can also put money in oil company. You can also put money in automobile or in technology. So in a sense, if some of the sector goes down, one of the sector goes down, maybe other would not go down. So in a sense, this is also possible through the financial system, through the financial markets, what we call, and also inter-temporal risk sharing. Inter-temporal is another thing, the word that economists use, which is in simple words means across time. So it is inter-temporal. For example, you want to save for the next generation, for retirement, another thing. So now you have income, but you want to invest that in order to have money at the time of retirement or anything like that. So this is across time. This is across time. So that is also possible through insurance mechanism and other kind of financial instruments. And by diversifying portfolio, this is another important thing, is that when people have this possibility of investing in different projects, then they can put some of the money, at least some of the money, into risky projects. And we know that some risky projects are risky. Why? Because they also give higher return. But those risky projects are important for overall economic growth, because people are putting money into, for example, research and development, developing new projects, new products and services. Although this is all risky, but as from an economic point of view, we need people to at least put part of their money into these things. So when you have this mechanism of diversification, at least let's say if you have 100 rupees, you can put 80 rupees into a very sound existing businesses, what we call blue chip, but then you can put 20 rupees into these risky ventures, because those risky ventures might fail, but even if some of those succeed, they have a very high positive externality. So this is another facility because of diversification. Then we have another very important function is mobilize and pooling saving. Again, if people have the world's best ideas for businesses and firm growth. If they don't have required money, they could not execute those ideas. And a financial system mobilize saving, and they pool saving and mobilize it. And this is identified again as one of the reasons for industrial revolution that happened in England. As one of the writer, he was actually one of the earlier editor of the Economist magazine. He wrote this thing that England in financial system mobilize resources for immense work, which is this industrialization. And actually average saving rate in England was not higher than the average saving rate in other part of Europe. But the ability of financial system in England to mobilize that saving, to pool that saving from dispersed resources, and then to mobilize that saving to the most productive use. That is one of the, as I said earlier, one of the factors which has been identified, which was responsible for industrial revolution. So this is again mobilizing and pooling of saving. Otherwise, even the best ideas would not be executed. And secondly, one for these businesses, specifically if you look at in technology businesses, it's not that you need a small amount of money. In order to scale the business, you need a lot of money. Even people from a very high socioeconomic background, even they could not spare that up much of money. Like if you need, for example, 100 million rupees for a project or 150 million, even very rich people as an individual could not afford that kind of investment. So unless you have this mechanism of financial system where people can get finances from, from different investors through issuing stocks and bonds or through financial institutions like banks, these projects would not be possibly executed. And the last in this series of major function is ease of exchange of goods and services. As we discussed earlier, one of the core idea of Adam Smith's in his Wealth of Nations was this idea of division of labor and specialization that led to innovation and that led to economic growth. These are the core ideas. But just imagine if the exchange is difficult, if people are unable to exchange, they are unable to and so financial system also facilitate exchange. So people can buy more goods and services by making payments now because of these digital payments and everything. So more you make exchange easier, that means more room for division of labor and specialization. So this all goes back to even Adam Smith's idea. So this is, these are the broad functions of financial system broadly. Then there is another distinction that we can make in financial system, which is called bank versus market-based system. In case of Pakistan, for example, banks dominate. If you look at Pakistani market, specifically, let's say stock market, there are hardly around 600 companies are listed. There are major sectors which are completely missing. For example, retail is not there, agriculture is not there, and many other even technology companies are already there, but it's not, they are missing. So financial markets are relatively weak in majority of countries, including Pakistan. So there the banks play more important role. So even if you look at the market capitalization of all the companies listed in Pakistan, just what is market capitalization? The market value for the firm. So there is a formula for that. Market price multiplied by the share outstanding. But just for simplicity, just imagine the market price of all the companies listed in Pakistan is around $50 billion, which is very low in comparison. As you can see, many companies are much higher than that. So in our case, banks are playing more important role. On average, globally, even banks are playing more important role. But even in countries like US, where markets are more they're much more developed, much more liquid, but nevertheless, the markets are important. But banks are dominating countries like Pakistan, India, and even Germany, Japan. These countries, although even developed countries, they have banks are playing more important role. Now, coming back to the economic development question, as we discussed in the development economic session as well, the importance of the poverty reduction and income distribution are the core areas there. Even there, people have identified that this asymmetric information, which we discussed earlier, create more problem for the poor. And poor don't have access to money or access to credit. So even if they have even business idea or any other opportunities to increase their income. One of the big thing that they are facing problem, despite there are many other, again, as I said earlier, I'm not saying this is the only problem, but one of the major problem is this credit constraints. So because they don't have collateral, they don't have collateral means security to give to financial institutional loan, and they don't have political connections. Like in countries like Pakistan, we have a long history of how political connection led to easy access to credit, and that easy access to credit to make give certain businesses and families certain advantages to set up their businesses, and they get this first mover advantage, and they build their empires based on cheap availability of credit from state institutions. So which poor people, of course, they don't have the required political connection and they don't have credit. So they are facing this problem of this credit constraint. And once you have financial system developed, then then they are more likely to have better access to credit. Again, one of the solution in this context, which is very famous in development paradigm and practice, is called microfinance, which is it all started from basically from Bangladesh by Muhammad Yunus, who also won the Nobel Prize, but not for economics, but for Peace Prize. And now from there, it spread across the world. The whole idea was to giving small loans to poor people, actually. And there is a whole debate on that. And recent research has also identified that even microfinance could not solve the poverty problems. It might help people to get out of extreme poverty, but there are again scalability problem. People are stuck with that particular small and medium and very small businesses enterprise. But nevertheless, that's a separate debate. But the point is, microfinance is again one of the solutions to overcome this problem. So before, again, there are a few more points, but I think there's a lot of theory and other things. So if you have any question before we move, because there are a few more things that I want to discuss. But up till now, if you want to, and not only question, you can comment and any other thing that you want to say. Before there is the last slide, which has other ideas which I want to share related to finance and the economy. Anyone want to just comment or? Okay.
May I?
So, yes, why not?
So I work as a research analyst at a brokerage company in Pakistan.
Good.
So मेरा काम है on capital markets, फिर fixed income में, फिर थोड़ा सा economics पे भी है. ये जो आपकी themes हैं वो बहुत ज़्यादा reverberate करती हैं across the पाकिस्तानी जो market है, उसमें depth तो बिल्कुल है ही नहीं. मतलब में से non-existent depth है. और जो आपने representation की बात की capital markets में, वो in itself is very poor because बहुत सारे sectors हैं, बहुत बड़े-बड़े players हैं जो बिल्कुल ही लिस्टेड नहीं है. तो ना उनके लिए डेटा है, ना उनके एनालिसिस, ना उनमें इन्वेस्टमेंट की अपॉर्चुनिटी. एज एन इन्वेस्टर अगर आप देखते हैं कि इम्तियाज इतना सेल्स कर रहा है, तो यू वुड बी विलिंग कि मैं इसके अंदर खरीदूं, कुछ चीज लूं. लेकिन वही है कि वो एवेन्यूज है ही नहीं आपके पास इन टर्म्स ऑफ कैपिटल मार्केट्स. दूसरा ये कि जो हम कहते हैं कि बैंक्स का जो स्पेसिफिकली बैंक जो है वो एक लेंडर है, उसका काम है फाइनेंशियल सपोर्ट करना, फिस्कल सपोर्ट करना इन अ सेंस. लेकिन हमारे यहाँ बैंक्स का मसला ये है कि वो उनका तकरीबन 50 to 60% पोर्टफोलियो तो सारा गवर्नमेंट सिक्योरिटीज में पार्क्ड है, बिकॉज वो एक रिस्क फ्री सिक्योरिटीज है और गवर्नमेंट उसको खुद इतनी फिस्कल सपोर्ट चाहिए कि वो क्रेडिट टू प्राइवेट सेक्टर जो है वो क्राउड आउट कर देती है एसेंशियली. और दूसरा इंसेंटिव भी नहीं है, रेगुलेटरी फ्रेमवर्क भी इतना तगड़ा नहीं है कि आप बैंक्स को मोटिवेट करें कि भाई आप जो है वो लेंडिंग करें. उसमें भी है कि अभी जो हम देख रहे हैं कि जो कल भी मेरे ख्याल से स्टेट बैंक ने अनाउंस किया है कि आप हाउसिंग लोन्स की जो परसेंटेज है एज अ टोटल जो क्रेडिट टू प्राइवेट सेक्टर वो 7% कर दी गई है, व्हिच इज अ गुड स्टेप, व्हिच इज अ वेरी पाकिस्तानी मार्केट के कॉन्टेक्स्ट में तो इज अ रेवोल्यूशनरी स्टेप बिकॉज हाउसिंग की फाइनेंस जो है वो ऑलमोस्ट नॉन एग्जिस्टेंट थी. तो अभी जो हम देख रहे हैं इसको, तो इसके बारे में आपका क्या ख्याल है कि अगर हम ये जो ट्रेडिशनल सेक्टर्स हैं कि जैसे दुनिया में जो बहुत ज्यादा डेवलप्ड है, मॉर्गेज इंडस्ट्री बहुत ज्यादा डेवलप्ड है, यूएस यूके का तो खैर बहुत ही आगे निकल चुका है, लेकिन डेवलप इकोनॉमीज में जिस तरीके से हम बांग्लादेश का मॉडल जैसे आपने जिक्र किया माइक्रो फाइनेंसिंग का, तो वो बहुत ज्यादा एक्सपोर्ट्स को, इंडस्ट्रियल सेक्टर को बहुत सपोर्ट करता है एसेंशियली। इसकी एब्सेंस हमारे मार्केट में आपको क्या लगता है, इसकी एब्सेंस से क्या फर्क पड़ा है?
नहीं, बहुत इंटरेस्टिंग, बिल्कुल जी। नो यू आर बिकॉज इन्वेस्टिंग इन सिक्योरिटीज, सो यू बेटर नो के मार्केट की पोजीशन क्या है। And this is, as somebody said, in Pakistan, banks are doing what they call lazy banking. So you don't have to do much. Actually, you just put, as you said, put your money into government securities. And again, you cannot blame them. This is not illegal. This is what they're doing. Is पे तो due diligence भी कम है. It's easy to manage. Balance sheet पे भी इसका कोई मसला नहीं है. इसको risk free consider करके, even capital adequacy ratio जो banks have to maintain, it is easy for them. So it's really hard to go and understand businesses and trying to solve their financing problem. So yes, this is a big issue. And again, some of the problem lies with the fiscal problem that we face, and that crowding out wala effect hai. Recently, stock market mein, I don't know much, but they have started this some kind of another board for SMEs, and I think one or two companies has listed that. So we need some kind of this mechanism that जैसे हाँ बिल्कुल, तो उसमें कुछ कंपनीज हुई भी हैं. This is, I think, a good initiative, but how long? But again, there are many other issues, not only for like supply side के issues तो हैं ही के regulatory issues है, but demand side भी. How many businesses really want to grow beyond a certain, for example, आपने इम्तियाज store, but this is mostly, I don't know their structure, but it is basically a family run business, and they are already getting, because of particular sector, I think they are getting financing from the supplier as well. So वो उनको भी कोई वो नहीं है, तो the whole even demand side पे भी problem है. Even firms are not willing to even go for those. जो जैसा है वैसे ही, even if the business is successful. So this is maybe a kind of cultural issue. एक तो interest वाला element भी है, many people are not willing to go there, and this is a big issue. और जो mortgage की आपने बात की, I think this is a concern again. It is highly inconceivable in developed economies that somebody is going to buy a house on cash. This is not possible actually. तो वहाँ इसी वजह से this whole financial development and financial sector had developed. So this is I think financial sector need to grow, and again they are not going to grow on their own side. Government अपना कुछ house in order करे, so that there is a kind of competition for the banks to make money by lending to individuals and businesses. So it's a it's not again through regulation, you cannot simply solve it. अभी जैसे उन्होंने किया भी है, but banks are they eventually, again, whenever you make a regulation, they find out a loophole within that, they try to do it, and even अगर वो कर भी दें, तो they are unable to develop their expertise, जो अपनी जो in-house वो नहीं develop कर रहे, because that's a new thing, mortgage lending वगैरह. तो कुछ हद तक the government can do it, the government can push them through state bank for certain kind of allocation, but ultimately this is a big issue that we are, I think, facing in Pakistan. It is quite obvious that one of the reasons that businesses are not going is because of their credit constraint. Recently, as the World Bank has stopped that ranking, but they used to have this thing called doing business report, and in that they have a different kind of ranking. And if you look at Pakistan, one of the section in doing business report was getting credit. That is how easy it is to get credit. So of course Pakistan lag behind in even from regional comparison, that there are a lot of problems of collateral and rule of law and enforcement contract and other things. So banks are not willing to give them loan, and again that is the whole point. That is of course creating problem, and people are businesses are unable to grow, which I have mentioned earlier. So yes. Anyone else who want to comment or anything on this line before we move to the last slide, but it has many things in a single slide. Okay, let's continue. Okay, again, because as we are interested in history of thoughts and ideas and people behind that, so one idea that I've shared with you, very influential, is lemon problem. Another important thing that is coming from academic literature is what we call efficient market hypothesis. This is by Eugene Fama, who again recently won the Nobel Prize for his contribution. And the idea of this efficient market hypothesis is that, and again, because economists are interested in demand and supply and prices and how the prices are dictating and giving signal to demand and supply. But one market, which we were just talking about, stock market, is a good laboratory to test these hypotheses, because in other markets, even in mortgage market, the prices are not that liquid and constantly available because the products are not homogeneous. But in financial market like stock market, if you go, this is, as somebody says, there is no free lunch in economics, but the only free lunch is prices, because you can check out, go to psx.com, you'll find out the prices of all the stocks, which is an amazing information. And because the stocks themselves are homogeneous, so it makes sense. So it does not matter which stock. These are called what we call fungible. Now we have these non-fungible things, but stocks are like fungible. You can exchange one stock with another of the same company, they are all same. So the idea of efficient market hypothesis is that if the markets are efficient, that means the price reflect all the available information. So that means whatever the price of a stock is there in the stock market, if we believe that this hypothesis of efficient market hypothesis, that means if the price of a stock is, let's say, 29, that means that 29 reflect all the information related to that company. So that company's information could be financial statements, which are already public information, past prices, past historical prices, or in dividend or income, or anything which is in past is also part of the prices. And even the journal information about the economy, about the monetary policy, about even the foreign issues, geopolitics, everything which is related to that company is already priced into the price. So the hypothesis is that whether the market is efficient or not. So there is a extensive research in this area where people have identified that the market is indeed efficient. And there are some interesting experiments somebody has done, and rather some of them are really, in a sense, like there is a famous experiment where they randomly select companies. Randomly, you create a portfolio, but randomly, without any science behind that, just randomly select. And then they ask expert. Who are the expert? The people who are working in brokerage firm, people who are investment analysts working for hedge funds and investment funds and mutual funds and other. So and they ask them to create an artificial portfolio based on their expertise. It's very simple. You can create it on Excel, or you can go to their websites of Yahoo and Finance. Even anybody who want to do it, you can create a virtual portfolio without putting any money. So they created a portfolio randomly, just randomly picking companies, and then they created a portfolio which is made by an expert, and a consultant who work for these, and then they analyze their performance over the period of time. And it is very easy to analyze the performance because the prices are available there. So it turns out that there is no clear pattern, that it's not that experts are continuously able to beat the market. That was not the case. So that if that is not the case, that means the prices are right. Market is efficient. You cannot predict the future price because the prices are already, market is efficient, and price reflect all the all the information. So this is the argument by pharma that the market is, this is the idea of market is efficient. No, whether a particular market is efficient or not, that's another question. So if you are unable to identify the future price, if you're unable to, in a sense, predict the future price, and if the prices reflect all the information, then we can say that the market is efficient. Otherwise, if you are able to, for example, based on even technical analysis, that is looking at the past data, if you are able to identify a certain particular pattern in prices, and you're able to identify the future price movement, and you can make money, in other words, you can make abnormal profit, that means the market is not efficient. So this is another big debate in academic circle, whether the market is efficient or not. And there are evidence on both sides. But personally, I think, and this is where I think, which makes sense, that for an individual, markets are efficient. it is very difficult to beat the market. Again, there are exceptions. There are investors like Warren Buffett and other, you can quote example, who have been able to beat the market for a very long period of time. But if you look at it for an average investor, I think Pharma was right. It is difficult to beat the market consistently. Randomly, you can beat the market, but it is not. So it is good for investors, especially retail investor and real investor, not to try to beat the market. Because once they try to beat the market, what they do is trading. And trading is generally, again, in academics, we cannot make a conclusive argument, but generally trading is not a good idea. Of course, there are people who trade and make money. Maybe some of you are doing it. Like recently, we have a long, people are very interested in cryptocurrencies and Bitcoin and other things, and people are trading on that. And but the point is, trading on average, research shows on average is not a good idea for most of the people. There could be a minority which can make profit for a long. For a majority of people, what they do is they make, let's say, 1 rupee per day, and they think they make a lot of money every day, and in one fine day they lost 50 rupees. So in a sense, they lost whatever the accumulated gain is. And recently, even this happened with Bitcoin and other as well. So trading, per se, investment and trading is different. Investment is like putting money in companies and in anticipation of rise in price and also dividend. That's a different thing. This is a bit long term. Trading is like within day normally, or within day or two, you try to get into market and out of market. And research shows that this has not been like a good strategy for most of the people. So this is, again, not an investment advice, but nevertheless, trading is a dangerous thing. And because people are unable to make, that also shows that the market is efficient. So for most of the people, market is efficient. But again, that does not mean that the market is efficient. That means there is no role for regulation or the thing. Because once this idea was presented by Pharma in 1970s, people stretched this idea and they put into policy circle. And this is what we discussed earlier in 1980s, this whole idea of free market economy coming back into policy circles, in what we call Reaganomics in 1980s in US. And they push this idea of efficient market, and they say the markets are always efficient. So what's the point of regulating them? What's the point of making sure? Because prices itself are automatically the best indicator. But later on, as we saw in the financial crisis of 2008, and even before that in 2000, it turns out that it is very important to regulate. Markets could be wrong. And all these crises, financial crises, indicate that the markets are not always right. Because one fine day, suddenly the market collapses. So what does it mean? There is no new information, but that shows that there is a imperfection in the market. So market is not always right. So this financial crisis also bring finance back into the economic agenda as well. Even economists has taken this finance very seriously, because they realize after the financial crisis that financial sector is unique, important, and also dangerous in a sense. For example, if any other sector goes down, for example, cement sector or technology sector or textile sector, it's not a good news. But that does not mean that sector would drag the whole economy with it. But financial sector is like that. And this is what they have learned. And that's why even in a free market capitalist economy of US, the government has to intervene and give the bailout to the bank. Because it was because banks were what we call, they were too big to fail. They were like extremely big, and they undoubtedly know that if they fail, the government is going to save them. So in a sense, the financial sector is not only important, it is also in a sense dangerous as well. So it is important in a sense to allocate the resources. And if something goes wrong, that is also problematic. And that is what we call too big to fail, when people realize, banks realize that they are going to be bailed out. And this has created what we call moral hazard problem. Banks were giving, as we were talking about mortgage, although mortgage financing is important, but sometimes too much of mortgage financing, and specifically other kind of financial innovation, what we call derivatives, like financial derivatives, like mortgage-backed securities and other things, they are sometimes very toxic. So many of the financial innovations are not good for economy, not good for the participant. They're only good for the bankers and the people who are selling it. So it's good for them, but they're not good for others. Then recently, I'm just going to touch about this. Blockchain is another interesting phenomena, which is an underlying technology of distributed ledger of record keeping without any centralized authority. So this push is, and this is of course very recent, and there are many development which is going on in this area. But within this, there is a thing called DeFi, decentralized finance, which is again a very recent thing, that where, for example, how can we get rid of financial intermediaries and used blockchain technology to allocate financial resources. Again, this is very primitive right now, but in future, maybe this could be a very path-breaking thing in terms of financial system, that how we decentralized finance without financial intermediation, which is just based on trust. We go to this blockchain technology, which does not require trust actually. It required this cryptography in order to verify this thing. And one of the important implication of this, although we have this digital money, online payments, but despite that, there is a lot of improvement need to be made in financial sector. Let me give you one example. Globally, the remittances across the world is around $500 billion. This is more than the whole foreign direct investment and financial assistance given by rich countries. This is more than that, $500 billion. And on average, remittances cost 6% in terms of service charges. Just imagine it turns out in billions of dollars, and banks are making this easy money by this remittances and other things. Just imagine by using the blockchain, like an email, if you can transfer money like an email with very minimum cost, that alone would give benefits of literally billions of dollars to the poor people normally who receive these remittances. So there is a opportunity in this new technology for financial development as well. And so in the end, finally, I would want to say this financial inclusion. There is no question in this that the financial inclusion, which means the development of financial institutions and markets, are vital not only for individual but also for firms. So this is important for firm development, and eventually that firm development would lead to sectoral development and eventually economic development. I think that is good enough. And if you can, because we still have 20 minutes, so we can have some question and answer or general comment. Maybe some of you have been working in this area, or you have your own insight or general comment or question. So so there is a question on chat. I think Farooq Saab, I said, my question is, why don't we focus upon micro level cottage industry like Bangladesh? Yes, it will ultimately boost the standard of living. Yes, again, this is a something that many issues, but one of the issues is again relevant to our context here in this session is financing. So microfinance is really important, because if, let's say, at a micro level, because of lack of finance, if somebody is running a very small business, a micro enterprise, so they don't have resources to expand it. Even if the idea is good and the market signals are there, people are willing to buy their products and services, but because the money is issue, so microfinance can help a lot. Even in Pakistan, we have some interesting experiment in this regard. In Pakistan, there is an interest-free kind of a microfinance institution called Akhuwat Foundation by Dr. Amjad Saqib Saab. That is a kind of innovation, although it is a kind of different, because they also rely on donation, and government is also putting money into their funds. So the sustainability could be a question, but nevertheless, he has also written a book on his experience called Akhuwat Ka Safar, in which he mentioned that the payback is extremely high. It is more than, I think, high 90s, something 95, 97% payback is there. So that means poor people are credit worthy. They want to pay back. They want to, it's not they just want to borrow and squander that money. They want to, expand their businesses, and they want to. So we have some really interesting experiment in Pakistan, and we need to focus on that, because this big businesses globally, they could not give jobs to. Let's take the case of telecom. We have very good, very vibrant telecom sector in Pakistan, but nevertheless, how many people they can employ? A couple of thousand. That's it. So that's not possible to do. So yes, we need to have this. Somebody raised the hand. I think who was there? Yes.
Fayaz was there.
Fayaz.
So, sir, I had to make a comment on this because मेरा perspective with regards to macro lending या जो finance sector उससे बहुत थोड़ा सा मुख्तलिफ है, because they charge exorbitant rates. जैसे आपकी example थी lemon और peach वाली, so essentially these people are all lemons, so we're charging a very high risk premium from these. I mean, हम लोगों ने काम किया था with regards to jazz का जो business है, they charge effective जो basically interest rate charge होता है, that's around 47 to 55%. That's enormous. और for the और ये जो होते हैं लोग उमूमन, these are the most vulnerable segments of the society, since they're not able to afford basic expenses, तो इनको लोन लेना पड़ता है. So it's either or, because what happens is कि आप अपने मोहल्ले के लोन शार्क से लोन लेने जाएं तो they charge you 100%, but if they charge you 47%, इसके साथ थोड़ी सी फिर moral shaming भी आ जाती है. So the consequences of such कि इसका penetration is very difficult, given कि इनका rate एक तो बहुत ज्यादा है, दूसरा इनके जो लेने और पे ना करने पे जो consequences है वो बहुत बुरे हैं in terms of society, because हमारे यहाँ culture भी ऐसा है कि किसी को पता चल गया है कि इन्होंने लोन लिया है, so that in itself is a very big problem. So that's my take on microfinancing in Pakistan. Bangladesh ka model is entirely different. They had a very different way of approaching it, and their costs associated with that were also different, because उनकी जो risk की calculation थी उसमें थोड़ा सा government support भी होती है, थोड़ी subsidy है, थोड़ा इस तरीके से, थोड़ा उस तरीके से balance किया होता है. यहाँ पे it's all charged on the people.
बिल्कुल exactly, and even there are even issues in India specifically. This has इसीलिए मैंने थोड़ा touch किया था कि even microfinance is not a complete solution. इस पे once this thing comes up, तो जब मोहम्मद यूनुस साहब को Nobel Prize मिला, तो it becomes a hype, and globally people thought that this is the solution if you just give micro loan, and then this problem that you have identified even has risen everywhere. Like in India, there are many suicides which has resulted because of this. वो उन्होंने खास तौर पे जो agriculture में lending की वो exorbitant rates थे that people could not pay back. So yes, this is the issue, and that's why Ahuat is, I think, an interesting example. And we need to make an innovation in different kind of models. It's not like a how to assistant, because if you go from commercial point of view, so commercial lending में अगर financing, अगर if people are putting their money into microfinance as an investor, as a shareholder, so shareholder would focus on maximizing shareholders' wealth maximization. So maybe that would not work unless there is a kind of mixture of some kind of government support and even donation, like a Huat ka jaise model hai. So that would work out. So again, if you're charging these exorbitant rates, so these people who are already vulnerable, and even their businesses could not make this kind of very high returns. So even you are actually pushing them into this a more depressing situation. So that's why, yes. So unless there is a kind of change in kind of business model in terms of the financing of the microfinance institution, a mix of donation and equity, that would lead to. Another thing is, for example, there is a thing called, which is not, I think in Pakistan, many businesses need money, and because traditional businesses would not give money for that period of time. Like banks are normally interested in a very shorter period of time. So we need this kind of what we call patient capital. So where people put money as a kind of, and there are even movements within finance, what we call social finance, or the finance which is there for projects which are good for communities in the long run, but you cannot make a return in 3 months or 6 months. So there is a kind of institutions which focus on those kind of investment which are good for society at large, but their return would come later on. So yes, traditionally, again, it's not just the solution. The microfinance, just giving money at these rates is not, of course, the solution. Anyone else want to make any?
So there is a question in the chat by Wajiha Raza. She asked.
Okay, a reason less from development of financial sector. Okay, yes, there are. It's a mixed bag. For example, first of all, banks, as we touched earlier, they're not interested in doing that. Why? From business point, let's say if you're running a restaurant and you get a kind of government contract and government and your sales is already very high and people are coming and as you're not interested in creating new dishes, improving your ambience, improving, because there is less competitive pressure. So that is the first thing, that banks, we cannot simply blame them because they don't face these kind of pressure, business pressure. So in a sense, more competition, and when the government relies on government, so government have to make its house in order in terms of reducing the fiscal deficit, or in order to reduce the reliance on local financial institution. So that would put pressure on the banks to look out for different avenues to make money. So it's not just giving parking money in the treasury bills. So when they do that, then they would look out and build their capacity, because banks don't have that capacity even to lend money to especially medium-sized and small businesses. Because you need, in order to do that, you have to build that capacity. You need to hire and train those people who are able to identify that lemon and peach problem. And they, based on, again, it takes time. It's not possible overnight. So that is one thing. And again, there is a regulatory framework as well. How, like, for example, there are certain development in mortgage market, government want to push it in order to, because to lend that. So that is also possible. So that it's a kind of, and as you mentioned, there is a kind of investor hesitant as well. I think this is a issue. Interest is also an issue, because many of the small businesses, not corporate, many people are hesitant for this interest because of culture and religious issue as well. And this is a big issue, I think, that many people are not really bothered. They're not interested. They don't want to even go to bank in any case, although banks are not even willing to give them loan as such. But even so there is even a cultural element. So this is another big challenge for us, how to reconcile these things. Because financing is important, there is no question in that. Literature is quite clear that without financing, you cannot grow, you cannot innovate, you cannot exploit the opportunities. But how to overcome these culture, and another reason that is also so these are the mixed bag of institution, regulation, and individual as well. So anyone else? If you want to, comment or anything related to.
I wanted to emphasize on the fact that, in Pakistan, there's a huge population of women, and they are excluded from all financial activity. Even as recently as, I think, 5 years back, women didn't even have identity cards. So financial inclusion and supply, making them, aware of opening bank accounts or using digital means of financial transactions. It's very important. And, the awareness is not there. Nobody gives them awareness. Nobody tells them anything. Our house workers, these women, they're working daily 24 hours, and they have no social insurance. They are not aware that they can save money or they can invest. So basically, there is such a huge gap between banks, financial institutions, educated people, and generally the people in Pakistan, especially women. And I think this is very important, that we should really deliberately, the government and the educated people and people in powerful positions, people with agency, they should, it's high time that we thought about this basic problem. I don't know where we are living, on which planet we are living. We are just so pathetically, I would say, pathological in this sense, that we don't understand that financial and social inclusion of women is is the key to progress in Pakistan. And the other thing I wanted to say is, like, I'm a retired person, my husband is also retired, and we have a little money saved up. And to invest that, it's so difficult. We have no choice. There is no choice except the what I would call as useless government funds. And if you go towards private banking sector, they offer the same thing, and there is no. And I'm simply. I'm 62 now, and I'm simply amazed how how we are surviving. So this is my input. Another thing about blockchain, it's very important now is using blockchain technology in healthcare, because it has a lot of scope in that, and it makes information transfer seamless. It provides security of health information. And it's very important that we go towards blockchain. And the big joke, one of the very talented people in Pakistan who's working in blockchain and health sector, and he applied, and they were telling him that this is illegal in blockchain, registering blockchain is illegal in Pakistan. So he had to go through some very difficult things in Security and Exchange Commission. And although using blockchain technology in healthcare is entirely different from this financial blockchain part of it, that's also different. So this is the problem in Pakistan. Nobody knows anything. And you are all living in silos. I'm sorry to say, economists are living in silos, the bankers are living in silos, the informal loan sharks are living in silos, and there is no coordination, there is no interaction between anybody. That is the problem. Thank you.
Thank you, ma'am. It's really, you have really highlighted this literacy, like one we call literacy, like ability to read and write. So there is a thing, and there's extensive literature on that called financial literacy. And even very literate people, like they could be literate in other ways, but they could have little financial literacy. So this is an important thing. That, and recently NIBAF has started this program called financial literacy program as well, where they have created an app as well, and they are propagating it. I don't know how much successful it would be. The point is, it is important. And I think even in schools, although we teach many subjects, but even within maths, for example, basic idea of compounding. This is one of the very powerful idea in finance, the power of compounding and interest rates and ratios and these things. They should be part of, although it's that they should be part of like basic things about shares, bonds, mutual funds. These should be part of a common curriculum. It's not like you need to be an expert in finance to know these things. Even as you said, as a concerned citizen, as a retiree, even you should know, many people should know as a young people that what are the options. And secondly, on blockchain, this is another big issue that whenever people talk about blockchain, they think of currency and Bitcoin and other things. But as you mentioned, it is the underlying technology, which is extremely fascinating, and it could be transformative as well. So yes, it can be used in healthcare for record keeping and other things, in property registry, and also in currency. Currency is one of the manifestation, but again, there are many. Fayaz, want to add something? So, yes.
So first, I'd like to apologize. I'm taking too much of your time. I'm behaving like government does with banks. I'm crowding out other questions. But I want to highlight two things. First is the disparity in access to finance. So जो हमारा एक सेक्टर है टेक्सटाइल सेक्टर जो इन्फेमस है, जिसको गैस भी सस्ती चाहिए, बिजली भी सस्ती चाहिए, फिर लोन भी सस्ता चाहिए, फिर टर्फ भी चाहिए, फिर एक्सपोर्ट रिबेट्स भी चाहिए, फिर सेल्स टैक्स रिबेट्स भी चाहिए. अब वो एक सेक्टर के अंदर इतनी फैसिलिटीज हैं कि वो फिर एसेंशियली तो सब्सिडी है, फिर आप उसको उधर से पकड़े या इधर से पकड़े, बात तो टेक्निकली एक ही है, वो सब्सिडी है। अब ये सब्सिडी अगर was placed into other sectors with a gradual emphasis policy level का के other sectors है, जैसे टेक्सटाइल एक्सपोर्ट्स के अलावा आपके पास क्रॉस उसके स्पोर्ट्स गुड्स का एक्सपोर्ट्स का सेक्टर है, आपके पास यूटेंसिल्स का सेक्टर है, आपके पास मेडिकल इक्विपमेंट का सेक्टर है, आपके पास एग्रीकल्चर सेक्टर है, वो है। तो ये जो एलीट कैप्चर है इन अ वे, दिस इज एसेंशियली एलीट कैप्चर कि भाई अगर आप नहीं देंगे तो हम टेक्सटाइल एक्सपोर्ट्स बंद कर देंगे, फिर आपकी 60% एक्सपोर्ट रुक जाएंगी, तो जो आपको डॉलर चाहिए वो कहाँ से आएगा? जस्ट अ सेकंड सर। तो आई थिंक कि ये जो बहुत ज्यादा डिस्पैरिटी है इन टर्म्स ऑफ एक्सेस टू फाइनेंस, ये खत्म जब तक नहीं होगी तब तक देयर इज नो होप कि हम फिर रेमिटेंसेस पे ही रहेंगे या फिर लोन्स पे रहेंगे या फिर हमारे पास दोस्तों से 3 दिन का डिमांड डिपॉजिट आएगा। अच्छा, दूसरी बात मुझे ये कहनी थी कि जो अभी पॉलिसी रेट आया था कुछ दिन पहले, बिकॉज वो मंडे को आया, इसके बारे में थोड़ा सा पूछना था आपसे कि व्हाट्स योर टेक ऑन द जो रेट का डिसीजन था उसके आपके क्या थॉट्स हैं? थैंक यू।
अच्छा, एक तो रेट्स के ऊपर ना पहले इवन थ्योरेटिकली, इवन इफ यू लुक एट लाइक इन कंट्रीज लाइक पाकिस्तान, जहां हम कह रहे हैं कि एक्सेस टू फाइनेंस इज अ बिग इशू, मतलब few firms are dominated by other, and even consumer financing भी, if you look at the ratio, it's very minimum. Mortgage की भी आपने भी बात की. First, even there is a question mark that even monetary policy transmission in countries like Pakistan. So even if the rate has gone up or down, how much it is consequential. So even there is a literature on that. So in countries where the financial system is developed and people are highly connected with finance through credit, and like in most of the developed countries. So yes, in that case, this is a highly consequential. So हमारे यहाँ तो even if you do research, so sometimes it is very counterintuitive result आएंगे कि even the monetary policy is like contracting or in a sense tightening. So sometimes the effect is not there in the real economy, and vice versa as well. So, but nevertheless, in case of Pakistan currently, yes, this inflationary pressures, though no doubt, and due to many reasons. So that's why they have kept it like that. And for the timing, I think this is there is no other way. You cannot reduce it because of inflationary pressure. So that is macroeconomy, and there are many other factors which what economists love to say, keeping other things constant. But that is a brief comment. Then there is a question by Bilal here on Benazir income support program for poor women. Is it any good or bad? Again, Bilal, this is again a separate question. I don't have a clear answer. I have not seen any research, but fundamentally, these kind of programs are for extremely vulnerable group. So we might think, but again, if they are targeted in a right way, I think it's a good idea to pay for those people who are extremely, although it does not make a big difference, maybe for you and me, for normal people, but for them it's important. So the important thing is how you allocate that, reducing leakages in the system, and then. So for that matter, I think in the situation like we are going through, and even globally, people are extremely vulnerable, and those who are poor, even they are more vulnerable in situations like COVID and others. So yes, these kind of programs are there, but the question is how to maintain them and support them, and how do people get people out of there. So it's not that it's how do people get out of these programs and their income goes up through again. Different kind of policies through micro credit and micro enterprise and medium-sized businesses as well. So that is a long way, but again, in the short run, we should, and that's an appropriate policy, I think. So I think we are almost at the end. Time is almost over. So if you don't have any question or comment anymore, so then we can close it. Hopefully that would help you to understand the importance theoretically and practically the role of financial institutions and markets. And again, if you have any more question, you can also send emails if somebody is interested in reading anything in much more detail. Again, for example, we have not touched in more detail because of lack of time, financial crisis and other thing. If somebody is interested, I can recommend readings on that, because that is a good way to analyze the role of financial sector and what happened if it if it goes off the track. So thank you very much. Now over to you, Hira. So I think we can close it.
Yes, so we can definitely close it. One of the interesting sessions of economical thought course, I think. I thoroughly enjoyed it, and I hope everybody else too. I'll email you if there's other students are asking any question further, and I can end the meeting and the recording.
Thank you. Thank you. Thank you.